Emperor Metals, thanks for attending here. Who are we? Well, before I get into the presentation, the general story is we used AI to identify an opportunity of a high-grade gold deposit. It was obscure high-grade gold deposit. That hasn't been worked for like 10 to 12 years. We identified it using AI. We built the first 3D model, and we really illuminated the exploration potential of this project. So it was really exciting. In our inaugural 2023 drill program, we were the only company, when we started drilling it, to sample the entire core. And what we saw in the host rocks of these high-grade lenses was that we had 25 meters of 1.69 grams per ton. We have low-grade bulk tonnage in the host rocks that no one ever sampled before. So we were quite excited, and we put a conceptual open pit model above this high-grade underground potential gold deposit. So that's what we're going to get into. Cautionary statements. Like I said, we picked it up. There was a historical mineral resource that was 727,000 ounces of gold with an average grade of 5.42 grams per ton. More importantly, what I really liked about the project was it had 5.7 meters of average thickness. We're in a Tier 1 jurisdiction. We're in Quebec. We're right along the Porcupine-Destor Fault. Over 200 million ounces of gold has produced in this district already. 90% of the gold has come out of this district from Canada. So that is a great jurisdiction, low risk for exploration. Like I said, we see this, the big revelation in 2023 is now we have this huge 1.8 kilometers by 800 meters wide open pit above this high-grade underground gold deposit that we're trying to grow. Last year, some of our maiden drill results were 10.8 meters of 15.8 grams per ton intercepts. And we had, like I said, low-grade bulk tonnage in the host rocks. And that's what helped us identify an exciting open pit opportunity. It's a great team. We're the Metals Group team. Chairman of the board, John Williams, Sean Majors, the CFO of the Metals Group company, involved in many different discoveries, Committee Bay, North Country Gold, Kaminak. Most recently, it has been like Benchmark, Thesis, and down in Suriname, Founders. We have Ian Harris, sits right there. He's an independent director, well-established. He'll tell his resume when he's up here. I've been in the industry 35 years as a geologist. I'm trying to leverage my career. I worked for majors such as BHP, Placer-Dome, Barrick. Most recently, I was up at Detour Lake Gold. And we subsequently got bought out by Cook and Lake and an Eco-Eagle. That work that I did up there, basically we increased throughput by about 20% through the mill, through the AI modeling that we did at mine site. And so I'm trying to leverage that technology into junior. There's we have 100 million shares outstanding, fully diluted, 143 million. Going into this year's, we are fully funded at $4 million. We basically have a lot of news flow ahead of us. We have 16,000 meters of assays coming in the next couple of months. 20% or 15% of those assays have already come in. We just finished our drill program at 8,000 meters, but we're going back to the historical core and we're sampling that because no one's ever sampled the host rock where these high-grade lenses occur. So this is where we're located. Location is everything. If you view, these are highways that run right through our deposit. If you view this potentially as a satellite deposit for supplemental feed, and all the mills, they're starving for more feed because they're under capacity, you wouldn't have these high CapEx costs that plague the industry because you wouldn't have to build a mill, you wouldn't have to build a tailings dam. So that's exciting. That saves you $500 million to $1 billion in CapEx costs. So that would be a good, high MPV, quick payback period, and basically a good rate of return. So yeah, we're excited about the location. That's what it looks like right now. We did some pit optimization. What you're seeing here is that 1.8 kilometers open pit. You can see as you go eastward, though, we start having these satellite pits. There's a lot less exploration to the east. So we really want to check that out. You can see it in plan here, the blue sky potential. You can see further east, we have the NIP zone. No one's really looked at that and connected the dots for this open pit environment. We're seeing 16 meters of 6 grams per ton, 2.5 meters of 51 grams per ton. So we're excited to expand the footprint even further east in this shallow environment for open pit mining. In magenta, that's what we drilled. So you can see our strategy this year. What we're trying to do is we put some holes in the ultimate pit because we want to add those incremental ounces. Because our plan is that we want to release an updated MRE in Q1 of 2025. But we also wanted to explore the potential of expanding this pit eastward towards those satellite pits and start connecting and building a larger pit. You can see that we can expand it east and even at depth. Here's a long section. You can see the opportunity to expand this deposit. So we're quite excited about this. You can see some of the mineable stopes that we looked at earlier on, in the center of the deposit. We got good thicknesses here and grade. We have stuff like 22 grams per ton of 5.4 meters or 15 grams per ton over 15 meters. So really healthy. I love the thickness of this. It's a pretty robust deposit. This is just a slide in red would be those high-grade lenses more so. But basically in black and green is basically the thickness and the grades of those incremental ounces that we want to add to the open pit to reduce the stripping ratios. So pretty exciting to see all this additional gold that no one's took into account. You can see on the right, the historical core. No one sampled that. If you're an open pit geologist, you would want to sample that core to the right. It's just sitting in the racks, this historical core. On the left, you can see the grade traces. Anything in gray there on those drill trace lines hasn't been sampled. Anything in green, it was only sampled in those high-grade lenses. And may I remind, that's 5.4 grams per ton average grade in those lenses. 2024, this is what some of that historical core looked like. It's all rusty. We plan on putting that into our incremental ounces. So pretty excited that people have never sampled this stuff. If you look at it from a geologist point of view, you're pretty excited to see that. We delivered. We're extending the deposit along plunge lines like you see here, 10.8 meters at 15.8 grams per ton. We're going along strike, extending the footprint of the deposit, 3.65 meters of 6.25 grams per ton. So we're delivering what we promised to investors. We built a geological model using AI. We did this in record time. We did it in a couple months. A lot of companies would take 3-4 years to build a nice geological model. We use this technology to our advantage to help create targets and to help deliver what we promised to investors. This is what the rocks look like. It's not a quartz vein. It's a replacement style ore. It's beautiful. Good thickness. You don't have the pinch and swell problems of a quartz vein. So miners love this type of stuff. Look at the competency. So if it's underground mine, there's not a lot of fracturing, good geotechnical stability in a pit or an underground. You can see on the right, that's the quartz feldspar porphyries that are the lower grade. The rocks are all juiced up, nice olive color, veins running through it. That's the 25 meters at 1.69 grams a ton. We want that in an open pit. We want to reduce stripping ratios and add those ounces. And we can build ounces more rapidly in open pit. Our cutoff grade isn't 3 grams per ton, it's 0.3. So right now, a project of similar magnitude as ours would range from $50 to $200 million market cap. Ours is currently sitting at $10 million market cap. So we see huge potential for growth. Location, location, location is everything. We have only 100,000 plus, just over 100,000 plus meters of drilling. These other projects of similar that I just talked about, they're sitting at 300 to 600,000 meters. We only have a little bit over 100, and we have 727,000 ounces. If we drilled another 100,000, our all-in costs right now are $200 to $250. So if we drilled it just in 100,000 meters, we're saving, compared to the average project of running about $450 all-in cost per meter, we're saving like $20 million. So that $20 million is additional drilling going into the ground. Investor gets more bang for their buck. So we're excited about that. We're going to start 16,000 meters of news flow coming out, and we're going to have a mineral resource update in Q1 of 2025. So listen, there's a lot more to this story. Please stop by our booth, talk to us if you want to know additional details, but this is a great opportunity. Thank you very much.